Bharat Electronics and the whole defense space is in focus, but Bharat Electronics in particular, by virtue of the significant uptick in the order flows that they've gotten relative to what the market would have anticipated, I guess relative to what even the management would have anticipated. Let's ask the management themselves about what is it that they anticipate now in terms of execution. Mr. Bhanu Prakash Srivastava, CMD of the company, joins us right now on the show. Mr. Srivastava, great having you. Thanks so much for taking the time out. This is Neeraj here.
Thank you, Neeraj.
Has the pace of the order flow surprised you? I mean, you guys are leaders. You would anticipate that a bulk of critical orders would come to you. But the pace at which these order flows are coming, is it taking you by surprise as well?
This is thanks to our government of India's speed with which Modi is working. So definitely the speed with which Modi is working is tremendous now. So what we anticipated that ordering or order acquisition process has been definitely faster in the with the customer. So we overshot what we anticipated.
Yes, you did. The question that therefore comes to mind is, Mr. Srivastava, that, and I think this probably asked to you almost every interview, that even if we look at the past, the book-to-bill ratio, as the market loves to look at, has always looked attractive. Maybe not as attractive as it's looking right now, but it's always looked attractive. Execution used to be an issue in the past. Do you anticipate that what you've demonstrated in terms of execution in FY24 can only improve with the quarters and the years to come?
See, we target a growth of around 15% at this level. But when your base moves up, base becomes high, that more and more challenges are there to maintain that momentum, because absolute terms, its absolute value is much higher than what we anticipate when base is lower. So what 15% growth we achieved last year was slightly easier than what we are targeting. We have been targeting 15 to 17% growth. We were in track, but because of certain geopolitical situation where Israel-Hamas war started, and then it has a definitely impact on supply chain, because some of our technologies and OEMs are based in Israel. So we are assessing the impact. We are in constant touch with them. So there has been some challenges in getting the items from these sources. So we are still hopeful of closing in towards 15%, but yes, I will definitely say it's much more challenging what has been last year.
You're saying execution, because of all the global issues that are happening, has become a bit more challenging than what it would have otherwise been?
Yes, definitely.
I get it. Does that pose a risk to, let's say, the numbers in a meaningful way? Because I heard you say that you're hopeful of nudging close to 15%. Would it be a shy away, or could there be a substantial miss?
I don't think substantial miss will be there, because see, 3 months is a long time in this Q4. And normally, if you see historically, except last year, our Q4 has been heavy. So whatever shifts happen in between quarter, we have been able to recover it in Q4. So that's why I am telling that we are having various plan B options. We are in tie-up and constant discussion with our OEMs also. So whatever shiftings are there in between quarter to quarter within, we will be able to recover in Q4. That's what we anticipate. So I don't think any substantial impact. But it all depends upon 3 months is a long time, how this situation improves or worsens. So that we have to see, which is not in our control.
No, fair call. At the end of Q2, your new orders had jumped, I think, 4 times YOY, as the numbers that I have suggest, to about 7,400 crores. Then you've received an order northwards of 4,500 crores. It's talk of how relative to what was earlier anticipated, your overall order book could be at least 20% higher than the earlier believed number by the end of FY24. Could you talk to us a bit about the nature of the order flows, some numbers there, and how do you expect to end FY24 with?
See, if you see the current today, this year we have clocked around 23,200 crores of order. We started with opening order book of 60,690 crores. So 23,000 crores we have already clocked, and a few thousand crores more are likely if things goes in a planned way. So even if we conservative, we anticipate now around 25,000 crore plus we add, and if with 15% growth around closer to 20,000 crore if we execute, if things goes on well, so we will have around 5,000 crore plus add on to what opening order book position was last year. So it comes out to be opening order book in 25 in 1st of April around 66,000 crores.
Okay, and at least from what I gather from the notes as well, FCS, EW Systems and weapon equipment from Hindustan Shipyard, Cochin Shipyard were amongst the key reasons for Q2. Now you're getting more orders as well. Is the nature of the order wins, Mr. Srivastava, changing? Are there newer avenues which might be small right now, which are starting to show some order flows and which might actually become bigger in times to come? I'm just trying to understand what is it that can take the market by surprise when it comes to order wins purely.
See, order wins in traditional we are already there. So any ship, submarine which comes out, we have major weapons and sensors from our side. Similarly, if you see airborne platform, any upgrade comes, any new platform comes, avionics portion, radar warning receiver, missile approach warning system. These are the products where we are in traditionally. So similarly in army side, if you see that tank electronics, BMP, there that electro-optics, gun control, tank that electronics, all these things are there from us. So all these traditional also are keeping us moving upward, because in the defense spending, government is already working on giving more order to shipyard, to ordnance factory, the DPSUs for this platform. HAL is getting the order. So some portion or other will come to us. Apart from that, there are other diversification where we are working. So I don't think there will be any major surprise or any surprise to market. These are all on traditional line only.
Okay. What did surprise the markets though positively was the Q2 execution, Mr. Srivastava, on the operational metrics side. Big bump up in margins relative to what was anticipated. Now, is this, were there some idiosyncratic reasons which led to that, or do you believe the new normal for margins could be higher than the past new normal?
See what happens, what margin we project to our stakeholders is based on the what type of product overall we have planned in the current financial year. Now some quarter margins may be higher, some quarters it may be lower because of which type of products got executed during those quarters and which could be in remaining quarters. So it's not like in some quarter if you are order that profitability or that margins are higher means next quarter also it will remain higher, because it's all depends upon total product mix. All products, they do not have the same profit margin. So yearly what we projected like 21 to 23% of EBITDA, I think we will be able to operate and maintain within that band only.
Okay. One final question, Mr. Srivastava. Actually, two questions roll into one. For execution or any or all of these opportunities, not now but over the next 24 months, would you need to undertake any significant capacity expansion? That is part one of my question. And therefore, would you need to, would internal accruals do the trick, or would you need to raise any kind of monies for the same? Could you start off by giving me a sense about that?
See, CapEx and capacity expansion is not one-time affair for Bharat Electronics. Every year we have been spending on CapEx for two purposes. One is that upgrading and enhancing our existing facilities and infrastructure, and another is the building new infrastructure. Keeping in line with the way we are getting the order, or we are likely to get the order, or we are likely to enter into the market scenario. So it's a long run process. Like I have already shared, we are building 5 new factories, 5 new facilities we have come up with. So one advanced electro-optics factory is almost ready at Nemaluru near Machilipatnam. We have already started working in the factory for EW system in Ibrahimpatnam. We are also working on for fuse, that explosive handling facility and explosive in Nagpur, which is primarily to cover with our requirement of electronic fuses and other explosive materials. We have already taken over on long-term lease Tamil Nadu explosives. We are also having some presence in Devanhali, that area, aerospace park, some 30 acres of land or so. So these are the area where we have been, we are working to expand significantly our capacity, apart from expansion in existing capacity itself. So roughly around 500 to 600 crore every year we have been spending, and this year also we are targeting to spend around 600 crore. So all these things cumulatively, they keep on adding our capacity to meet the requirement of the customer in business.
Well, steady state, you're doing well. Wish you all the best for some surprises, Mr. Srivastava.
Thank you.
If you, not that you need to manage it, but well, if you bring it, why would anybody complain? But thank you so much for talking to us, and all the best for a great year end.
Thank you.
That's the view from BEL. Viewers, thanks for tuning in.